Hi and welcome back. In this new handout, I'm going to explain types of orders: market, limit, and stop orders. In the first example, I state that you have placed a market order to buy 100 shares of Astro Technologies. And the two questions I ask is: one, does your order execute? And two, at what price? So, for market orders, the answer to does your order execute is always yes. And for this entire handout, we're assuming that it's between somewhere between 9:30 and 4, and the market is open. So we'll assume that it's 10 a.m. when for time's sake on all of these examples. Now, so market orders always will execute, and a market order is a very simple order. It's just same thing as if I asked you to go to the store and buy me some chocolate milk, and that's all I said. You have as much money, use as much money as you have to. Just go to the store and buy me some chocolate milk. So you're going to go to the store and you're going to buy those chocolate milk because I asked you to, and you're just going to place whatever the market price is. Very simple. So here, if you put your order in, at the time your order is entered, the stock price is $42.25. That means this order will execute, and your price is going to be close to $42.25. So when you place a market order, you're never actually 100% guaranteed to get the price you see as the last ask price, because that's the price you pay when you're buying a market order. You're going to pay the ask price. So if you saw an ask price of $42.25, you're going to pay something close to $42.25. But if it jumps up, by the time your order actually is executed, you may pay a little bit more or a little less for it, because with the market order, you just don't know. That's the same thing for me thinking that maybe I think gasoline is $2.50 a gallon, and I tell you to go buy 10 gallons of gasoline. You get there, and I drove by this morning, I saw it was $2.50. By the time you get there in the afternoon, it's actually $2.48. So you're of course going to buy it at the lower amount. Okay, so market orders are very simple. Just remember, market orders always execute, so the answer to the first question is always yes for a market order, and the price is going to be someplace close to where the price is when the order is actually entered, because it may change when it's executed. Okay, so let's move on to the next example, and the next example is you place what we call a fill or kill limit order to buy 100 shares of Astro Technology at a price of $38. The stock is currently selling at $41. Okay. Now, fill or kill means you're only going to ask once. So a fill or kill order means that you're going to go in, say you're going into the store to buy the chocolate milk, you're just going to ask that cashier once, I want to buy the chocolate milk at a price of $38. And if she says no, the price is $45, then the order is killed. It will not execute, because this is also a limit order. So I set a limit to buy the stock at $38. Means I don't want to pay 1 penny more than $38 to buy the stock. Okay, so the stock price is currently selling for $41. So that's the current stock price. Now, so keep that in mind. This is an ask once order. Fill or kill means ask once, and limit order means I want to pay $38 or better. I'm not paying a penny more. That's my limit is $38. Okay, so the two questions here: does your order execute, and at what price? So we have a couple of different conditions here. The first one is, if the stock price moves to $42.25, will the order execute? No, because it's higher than $38. I'm not going to pay more than $38, so this order would not execute. If the stock price drops to $34 3 days later, will this execute? Does this order execute? The answer is no, because this is a fill or kill. They're just going to ask once. They're not going to wait around for 3 days until it drops to $34. So that's not going to execute. Third example, if the stock price drops to $38 3 hours later, will this execute? No, because since it's a fill or kill, it's only going to ask once, and that's it. So it's not going to wait around 3 hours until the price goes to $38. So it's not going to execute. Okay. If the price drops to $37.75 at the same time you execute your order, will this order execute? Yes, because it's better than $38, so it's going to execute, and the price is going to be $38.75. So this will execute, and I will get a price of $38.75 because that's the price. Because here I say it goes to $37.75 at the same time I execute the order. So yes, this is the price, $37.75 I'm going to get for this fill or kill. All right, so let's look at it. What if we change it to, we're going to place a day limit order for 100 shares of Astro Technologies, a limited price of 38, and the stock price is currently at 41. So here, this is a day order. It means it's good for the entire day, and it's also a limit order, so I'm putting a limit of $38 on this order. Now, with market orders, you never have a day or fill or kill or good to cancel with a market order because you don't need it. You just go in and buy it. It always executes the first time it's asked, so you never have to put a time frame on it. But limit orders you do. So this limit order is a day time frame. Okay, so let's ask those same two questions again. If the stock price moves to $42.25, will this order execute? No, because $42.25 is higher than my limit. If the stock price drops to $34 3 days later, will this order execute? No, because this is a day order, not a 3-day order. So it's not going to wait around for 3 days to get that price. If the stock price drops to $38 3 hours later, will this order execute? Yes, this order will execute because it's meeting my limit of $38, and 3 hours later is within the day. Remember I said pretend like it's 10 o'clock when we set these orders up. So yes, this 3 hour, it's still within the trading day. It met my limit, and it's going to execute, and it has to be a price of 38 because that's what my limit's set at. It's going to be a price of 38 or better, but as soon as it touches 38, it's going to execute, get me 38. Okay, so what if the price drops to $37.75 at the same time you execute your order, meaning that you place your order for a limit of, you look in the market, it says 41, you place an order for 38, and then when your order actually hits the floor, the new stock price is $37.75. So this will definitely execute because it's below my limit, and I'm going to get the $37.75 because the limit of 38 means $38 or better, and it's currently at $37.75, so that's the price I'm going to get. Okay, so let's move down to good till cancel. Good till cancel, sometimes known as GTC, is good. It's basically good for 6 months in most brokerages. So if I place this order, I'm placing an order. It's a good to cancel limit order to buy 100 shares of Astro Technologies at $38, and the stock's currently selling at 41. Okay, so does your stock order execute, and at what price? If the stock price moves to $42.25, will the order execute? No, because it's above my limit. If the stock price drops to $34 3 days later, will it execute? Yes, it will execute. But I'm not going to get $34, I'm going to get $38. And you're like, why? That don't make sense. But listen, it doesn't just jump to $34. It went from $41 and had to have touched or crossed over 38 first. So even though it dropped down to $34 3 days later, some point, maybe 2 days later, it hit 38. And it's going to buy it for me at 38. So with a limit order, as soon as your limit is reached 38, it's going to buy that stock. It's a computer. It doesn't know to wait around. Like, it can tell the future. In 3 days, it'll be $34. It doesn't know that. So as soon as it touches 38, it buys it. If the stock price drops to $38 3 hours later, yes, we already established this in the previous example. This will execute at 38. And if the stock price drops to $37.75 at the same time you execute your order, and again, yes, this will execute, and I'll get the better price of $37.75. Okay, so let's look at a stop loss order. So there are two types of stop orders: a stop loss order and a stop limit order. So the stop order, just by itself, a plain stop order, converts to a market order, and that's going to be important in a minute. So I'm going to place a stop loss order, good to cancel, to sell 100 shares of Astro Technologies at a price of $38. The stock is currently trading at 41. So with a stop order, we have to pretend that we already own it, because generally stop orders are placed on stocks we already have a position in. So say we bought the stock at $10 and now it's trading at 41, and we're afraid that it may drop suddenly back to $10. So we're basically putting a line in the sand saying, if this stock ever touches 38 again, sell the stock for me. So it's currently trading at 41. If it goes to 42, 45, 50, 60, 70, we're going to continue to own it and no transactions will happen. But if it ever dips down to 38, it's going to sell it to me to protect me so I don't take any more losses. That's why we call it a stop loss order. So I'm stopping the loss. I'm stopping losses at the $38 mark. So there'll be no losses at any lower price. Okay. So we're going to ask the same two questions. Is your order executed and at what price? So if the stock price moves to $42.25, will this stop loss execute? No, because we don't want it to execute. If the stock price keeps going up, since we already own it, we like that, and of course we don't want that to execute, and it won't execute. If the stock price moves to $34 3 days later, will this stop loss execute? Yes. As soon as the stock, and it's good to cancel, so it doesn't matter that it's 3 days, but as soon as the stock hits 38, it's going to activate the stop loss order and turn it into a market order. So as soon as it touches 38, that's a computerized trigger saying sell the stock for this person. So it is going to execute, and I'm going to get a price close to 38. Since it's a market order, I can't really be sure. Limit orders, I'm going to get my limit or better. Market orders, I'm going to get something close to 38. It could be $38.05 or $37.95, but something close. Now, if the stock price drops to $38 3 hours later, of course, yes, that'll execute, and price, because it converts to a market order, a price close to $38. Now, last example is the stop limit order. So here, we're combining the stop order with a limit order for a little bit more precision in our execution. So, same story, 100 shares. We want to sell 100 shares, meaning we own it already. So stop orders are usually placed on positions that we have. So you can place a stop order on a long or a short order, but you don't place a stop order on something that you have no position in. So these are only for stocks you have a position in. So we have a 100 share position, and we put in a stop limit order to sell at $38, and the stock is currently trading at 41. So does your order execute, and at what price? So if the stock price moves to $42.25, will it execute? No, because the limit is 38. I don't want it to execute if the stock goes higher because I own the stock, and the stock going higher is good for me. I don't want it to execute, so that's what it's doing. If the stock price drops to $34 3 days later, will it execute? Yes, the good till cancel will protect me and sell it at 38. Even though it's dropping all the way to 34, as soon as it touches 38, the limit order will kick in, and I'll sell it at exactly 38. That's why, now the stop limit orders, you'd say, well, why would anybody ever use a stop loss order when a stop limit order is a better precision? Well, it's because it costs more commission generally to use a stop limit order. And that's why some people may just use the stop loss order, because they're getting a price pretty close, and depending on how many shares they're selling, a small change won't really matter too much, and sometimes may work in their favor. But with the stop limit order, this is for people who want the precision to get the actual $38 limit. So if the stock price drops to $38 3 hours later, will it execute? Yes. In both cases, good to cancel for 3 days or 3 hours. It's within that 6-month window, it will execute. And since it's a market order, it's a stop order that turns into a limit order with a price of 38, that's the price it's going to sell it at for me. So again, why would you use these stop orders? It would be, say you're going on a trip and you can't watch the stock market for a week, and you're worried that this company may dip down to a price lower than what you actually purchased it at. So in order to protect yourself, to lock in your profits and limit your losses, you can create these stop orders to automatically have the computer trade for you in your position. So that way, if there's a market crash, you get out while you still have profits on your positions. Okay, so that is this handout, and this handout is related to Chapter 3. And I will talk to you next time. Thank you. Take care.